All right, welcome to Talk Tickers. Today, we're digging into ADT's latest third quarter earnings, and frankly, it's a bit of a head scratcher. You look at the report card, and it looks pretty solid. But then you look at the stock's reaction, and it tells a completely different story. So what gives? Let's get into it.
Okay, so first things first, let's just look at the headline numbers. ADT delivered what you'd call a classic beat. Their adjusted earnings per share, 23 cents. That's a penny better than the Wall Street consensus. And revenue? That came in at $1.3 billion, also just squeaking past what everyone expected. So, a beat on the top and bottom line. Usually that's the recipe for a pretty good day on the market.
But it was not a good day. Not at all. The stock ended up getting hammered, finishing down a brutal 8.1%. And that right there, that's the central puzzle we're going to solve today. If the numbers looked good, why on earth did the market just dump the stock so aggressively?
So to really get what's going on with this disconnect, we have to look at this from two different angles. First, let's step into management shoes and look at the bull case. From their perspective, they painted a picture of a company that's resilient and just executing really well.
The CEO, Jim DeVries, he really summed it up perfectly on the earnings call. He pointed to what he saw as the big wins for the quarter. You've got solid revenue, really robust cash flow, and very, very strong EPS. This was the story the company wanted everyone to hear.
And you know what? If you actually dig into the numbers, you can see exactly what he's talking about. That adjusted EPS, it wasn't just a small beat, it was up 15% compared to last year. And get this, their year-to-date adjusted free cash flow, it surged an impressive 36%. On top of that, they've returned almost $750 million to shareholders just this year. I mean, come on, these are not the numbers you see from a company that's in trouble.
Okay, so that's the bull case. Now let's totally flip the script and look at the bear case, because this is where things get interesting. This is where we shift from what management said to what the market heard. And it's pretty clear Wall Street was reading between the lines.
So here it is, the big question. What did investors see that made them just slam the sell button, even with all those great-looking metrics we just went over? Well, the answer isn't in what happened last quarter. It's all about the outlook, what's coming next.
And here's the split, right here in a nutshell. You had management on one side celebrating the performance they just delivered, that strong cash flow, the great EPS, but the market, they completely zeroed in on all the clues about the future. They heard conservative guidance, they saw that recurring revenue growth was getting a little soft, and they picked up on all the talk about a cautious consumer.
So let's break down exactly what had the market so worried. First up, the guidance. Yeah, they raised the full-year revenue guidance, but only by a tiny bit, and they didn't touch the free cash flow guidance at all. To Wall Street, that screams don't expect any big surprises. Then there's attrition, customer churn. That ticked up to 13%. And the big one, recurring monthly revenue, it grew just 1%. Oof. To top it off, subscriber ads were down. Now the company said, hey, we're just being disciplined with our spending. But the market read that as, uh-oh, demand is slowing down.
So faced with this, this really negative reaction, what does management do? Well, their response was basically to pivot the conversation. They started talking about their long-term strategy, arguing that everything they're doing right now is to set the company up for strong, durable growth down the road.
And that strategy, it really has three main parts. First pillar, they're optimizing their portfolio. That means selling off some of the lower margin stuff, like their multifamily business, and instead buying up core customer accounts in bulk. Second, they're trying to innovate, right? Launching new products like the ADT Plus Extender, refreshing their whole Google Nest lineup. And third, they're still aggressively returning cash to shareholders, which is their way of signaling, hey, we're confident in our cash flow.
And this all brings us back to that super important metric, RMR, or recurring monthly revenue. You got to understand, this is the absolute lifeblood of ADT's business. It's that predictable subscription money that comes in every single month, and that's what the market really loves. So management's whole argument is basically this. Look, all these moves we're making, they're designed to protect and grow the long-term health of our RMR, even if it creates a little bit of noise in the numbers right now.
Okay, so after all that, where does it leave us? We've heard the bull case, we've heard the bear case. Let's put it all together and give our forward-looking verdict. This is the next call.
All right, looking ahead to the fourth quarter, here's what we're forecasting. We're calling for adjusted EPS to land somewhere between 20 and 22 cents. That stable free cash flow should definitely help support the bottom line.
For revenue, we see it in a pretty tight range, right around that $1.3 billion mark, mainly because that cautious consumer is probably going to continue to be a headwind for new signups. So, when you weigh everything, we're giving this a rating of market perform. The risk and the reward here just feel very, very balanced right now.
And now for my favorite part, our outrageous but plausible trade idea. Look, we saw a ton of options activity around this earnings report, and that just screams uncertainty. The market is clearly ripped in two here. You've got the solid fundamentals on one side and the nervous outlook on the other. Because of that, making a simple bet on up or down is really tough. So instead, a play on volatility itself could make sense. For instance, you could look at a Q1 2026 straddle. Now that's just an option strategy that makes money if the stock makes a big move in either direction, up or down. It's basically a way to bet on the uncertainty itself, for when the market finally figures out what to make of ADT's next move.
So, that's our take on ADT. And of course, the final reminder, this is not financial advice.